Welcome to September's market update, where we are going to talk about interest rates, what's going on with them, talk about inventory and what's going on with inventory, and where some statistical patterns are headed for the upcoming year for the inflation slash interest rates and that type of stuff. So welcome, guys. Let's get right into it. Eric Hatch here with Century 21, and thank you so much for joining us today. If you would like to go scan this, you can scan this. It takes me to my website and other various different locations. Please subscribe to our channel where you can get some up-to-date marketing updates of what is basically what's happening basically in today's market. So let's talk about home sales first. A lot of people want to know kind of where the home sales are. A lot of sellers are asking this, buyers are asking, is it a good time to buy with interest rates high? But let me share, we'll go with this first. Existing home sales, have receded 16.6% on an average. So you can see on this, and we're here over in the West, so we're faring way better on the existing sales at the moment from year to year dates, from 23% on Northeast and Midwest. So down 12.5% on that from the National Association of Realtors. We can actually go through and see on the next one that two factors are driving current sales activity: inventory and availability, and mortgage rates. Unfortunately, both have been unfavorable to the buyers. So let's talk about that inventory on this. The average annual inventory home sales, and you can see, and this is basically on a 6 month, if a healthy market is when we have about 6 months worth of inventory. So where it's like not really a buyer's market, not really a seller's market. When we had the frenzy, it got down to about a month's worth of inventory, and that's when the prices just kind of escalated and houses kind of flew off the shelf. And right now we're about 3.3. So you can see it's rising to more of the standard, healthier market that we've had over the period of years. You can kind of ignore this kind of craziness here in the middle. So you got single family housing. So this is one of the things that I love seeing this chart, that you can see that when house buildings and builders just completely stopped building right after the crash. You can see they completely did, and then it kind of dropped off where they got hurt. They got hurt and they lost a lot of money, so they stopped making and building houses. And so you can see right here, this is the first time in 14 years that we actually got back to kind of a 50-year average norm of normalcy of actually building homes. So it's nice to see that the inventory of new builds are actually beginning to happen. So this is kind of what caused a little bit of an issue of not having the inventory that we actually need. And you can see today that today's homeowners are staying in their houses on an average of 9.3 years, which in the past, before the crash, was about every 6 years people would actually move. And now what's happening here is that after the crash, the longevity, that less people are actually moving because they're staying in their homes a little bit longer. So that is also something that's affecting why we have a low inventory at the moment. You can see that new listing accounts each August of each year. You can see that we're 2023. Now you can get rid of this is going back to the normal years, skipping 2021, but you can see here that we are still substantially lower on the listing counts of national listing counts that we actually need to have for the inventory, according to Realtor.com. And we've got active listing counts. Again, this is the active ones, and you can see we are half of what the inventory that we normally had back in the normal years of the inventory nationwide. So that's causing a little bit of slowdown too. While inventory continues to be in short supply, August witnessed an unusual uptick in the newly listed homes compared to July. Hopefully, signaling a return to seller activity headed toward the fall season, which typically is the best time to buy a home. And this is an interesting graph because you can see over the year after year that what happens is, everybody knows, in April, May, June, a bunch of houses come in the market. People kind of make this move during the summer, and then it dies down with the inventory. So historically, we're looking at some historic lows for that as well, and also seasonal. But look at this, what just happened. This is the first time in a long time that we've actually had an uptick here in August of inventory. So hopefully the next month marketing report that we give you, that maybe this will continue to rise a little bit, and we'll have this different graph right here that inventory is starting to move. And what this tells me right here is that I think that people have been waiting to maybe sell their home, waiting to move, maybe waiting to buy because of higher interest rates, finally people just said, you know what, I can't wait anymore. I just got to go because of some family, business, whatever it might be. And so it actually has an uptick here. So we're going to watch that carefully to see kind of what goes into it. So let's look in the lending landscape of kind of what's happening right here, which you'll find this kind of fascinating because you can see here that the mortgage rates tend to track the government bonds and the inflation with a lag. So you can see right here on the blue, we have this inflation kind of went up in the 70s. And you can see that kind of came back down. The interest rates, this went up, and the interest rates kind of followed the lagging and kind of going down with this here on this. So now you can see that inflation shot straight up right here on this. And now look what's happening. So inflation is completely dropping on this other side. So this historically, and some people feel that, looking at the numbers, that the interest rates, because of what's happening with this, that will lag behind, and hopefully we see a drop of some interest rates. Now, they're feeling that we could get back into the high sixes by the end of the year, and looking at getting maybe into maybe a mid six to low six in the beginning of next year, and even ending flattening out around around 5 or so percent is what some people are mentioning that I'm listening to, which I will tell you right now, if those interest rates get anywhere near a 6 or even a 5, things will just escalate again, where your inventory and sellers will throw their houses on the market, and buyers will have another buyer frenzy because there's just not enough inventory to go around for the buyer demand that is actually looking for houses at the moment. So that was an interesting graph. So we're going to kind of watch that here in the next couple of months as well when we get the new data that pulls in. I noticed this was interesting about some home buyers. They're home buyers who are getting that are under age of 30. A lot of them are getting gift from family members. They're getting gifts, inheritance, family members. So there's a nice percentage of that. But there's also people that don't have that gift money available to them. And I'll let you know that I've got 2 other buyers that are currently in escrow right now, that buyers down payment assistance can help first-time home buyers who don't have the help from the family to afford a home. So there are different things you can do by asking for a rate decrease for a credit for your down payment, a credit for your closing costs, and things of that nature. So there's some programs that are still out there for you. So we'll talk about home prices. That you can see this was an interesting graphic that we shared earlier in the year, that at the end of 2022, that 37% of the population in the United States felt that we were going to have a massive crash of the market. That's a pretty high number, because look in 2021, look at this is a very low thinking that we were going to have a crash. So this was a huge number at the end of 2022, a survey that was done by Fannie Mae. And as we go through this graph, which is interesting to see, that as we get, going into January, still 37%, got into February, I get it all the time that people tell me that there's going to be a potential crash happening. April, May, the consumer confidence continues to go down, that they feel, maybe there just isn't going to be that crash that kind of everybody anticipated that possibly they were going to see. So you can see that 1 of 4 still believe prices will depreciate. But this is really nice, and I love this graph that we've shared the last several months, that we keep adding green behind it. As you can see right here, is that we had in the last beginning of last year, it was great. Then at the end of last year, in the beginning, middle to the end, it kind of like dipped. So we had lots of a loss of depreciation of value of properties. And now you can see that all these other big companies right here are now, you can see their numbers are coming up, that we're seeing appreciation. Yes, you're still seeing some housing prices of some people that listed their home that are coming down, and some decreases in values of listing prices, but they're overall looking at that we are appreciating in numbers. So if you look at this, Zillow, Black Knight, Freddie Mac, they feel the same. They feel that they're actually seeing appreciation starting to happen on the sales of the homes as well. So Home Prices Expectation Survey, a nationwide panel over 100 economists, real estate experts in investments and market strategies. And this is what they're kind of thinking of moving forward with some appreciation of coming into all the way to 2027. So they're thinking that 2023, now keep in mind, they had this way down here. So that's why this is a high, and maybe this is a little bit lower, is because they had anticipated our appreciation would be way lower in 2023, and they're now changing and seeing that we're going to actually have a normal appreciation value of around 3.3% next year. So you can see if people are on the fence going, should I wait? Should I buy? What's going to happen? Because I will tell you that if those interest rates drop, and all of a sudden you're a buyer waiting that maybe you want an interest rate drop, what's going to happen is when they do, the buyer frenzy will happen. You'll be in a multi bidding war on something and you're going to pay $20,000 to $30,000 more on the house, which if you would have just bought today for a 7% interest rate and then maybe refinance when they drop, you'll be better off because you'll actually be able to get the house that you want and you won't be competing against that house. So just a heads up for those buyers that might be watching at the moment. So we see some appreciation that would be happening here. You got a 23-year end of home prices forecast. So you got this was the 20 at the end of that. This was their forecast of where they thought this year was going to be, and now this is very recent data that they've all switched and said, you know what? I believe that Fannie Mae, Freddie Mac, all these people says, I think we're going to see an appreciation here in 2023. So beginning of the year, current forecast. So it's interesting to see kind of them making those changes on their business plans as well. Equity. This is something real important to understand because we've had such high appreciation in the last 2-3 years that 70.7% of mortgage rates, hang on a second, boom, boom, rates are less than 4%. So you can see this is kind of crazy of that is that, yes, I wish that some of our other homes and everybody wishes that we had a 3% or less interest rate, but 26%, have an interest rate that are less than that. Then you got 44, and there are some people now that building at 6% and then 5%. So what's interesting when you look at this graph on the equity about maybe who may not want to move, because I have sellers that tell me all the time, Eric, I don't know if I want to move right now because I have a 2.9% interest rate, and why would I want to move into a 7% interest rate? So when you look at this, you think that this group of people probably aren't selling. This group of people that were in the 3% to 4% are probably not selling either. So you have a smaller amount of sellers that are willing to even think about selling at the moment, which is obviously why we're having such low inventory at the moment for the buyer demand that is looking to purchase properties. So you can see that mortgage rates are less relevant to older homeowners, because the interesting thing here is that they all have, a lot of these people, and 43% of it is because they would not need a mortgage. So that's where a lot of the buyers are coming from, are the people moving to, whether they're selling, they're retiring, moving to a different location, moving to children, wherever they're moving to, and they're bringing their cash with them because they have so much equity that they're able to put down 50% to 75% to full cash on a property. So a 7% interest rate isn't affecting them as much because they're bringing in so much more money. So that's kind of an impact of what's kind of happening right here on homeowners or home sellers with the amount of equity that they have. Mortgage rates are less relevant to homeowners. Oh, so I already did that one. We didn't do it. This is actually to where the homeowners actually are less relevant to them as baby boomers, 35%, because a lot of them have the cash. And then you can see that it drops down. And this is interesting to see that Gen X at 20%, that right now that they're feeling that, hey, you know what, we've got if 6 or 7% is kind of where the interest rates are going to be. And keep in mind, guys, those who are watching for the first time, our normal average interest rates have been between 5 and 6%. So going up to 7 isn't really out of whack, compared to like historically of where these things have been. It's just that we've been kind of in a frenzy when you get down to 2.9 to 3.5%, in the past. So just wanted to show you that here's the equity, kind of showing you that that 38% of the people have more than 50% of equity in their homes. And so there's a lot of equity that's sitting here building up into home ownership, which is really nice too, on owning their house free and clear. I just wanted to share, guys, with you as well that our new buyer and seller fall guides are available. So if you'd like to get a copy of that, just shoot me over a text or DM me or send an email respond to this email, and you'll be able to get one of these really nice. It's a digital format that you can actually read. It shows a little bit more about kind of what's happening, talks about things around the country. So if you're looking at moving to Florida or wherever you might want to do, this will give you kind of a feeling of kind of what the markets are doing nationwide. So guys, appreciate the time. Thank you so much for watching and listening. Please connect again, subscribe to our channel if you're watching this on YouTube. Hit the bell that you'll get some new instant notifications when I actually post my next market update or some other valuable information. And we'll talk soon. Take care.